Welcome to my YouTube channel. I remain Honest Kid Forex. In this video, we are going to be looking at candlestick anatomy. We'll look at what the candlestick represents in the forex market, how you can use them, and when you look at some of them, what information do you derive from it. We are going to look at the concept of wick rejection. We are going to look at the power candles and then the candlestick pattern. Then this video is applicable to both forex market and that of synthetic, but in synthetic index the concept of wick rejection is very important, and that is why I'll be teaching this thing on the basis of what the synthetic index. All right, so without wasting our time, let me just outline what we'll look at so far to ensure that we don't miss our part here. All right, so the first thing we'll look at, candlestick in general. Then we look at wick rejection. Then we look at power candles, and finally we're going to look at candlestick pattern. So these are the concepts we are going to cover in this video. All right, okay, so what's a candlestick? All right, please pardon my spelling, I think there's an error here. Yeah, I think that's okay. So what are candlestick? Candlestick is defined as the language of the market. It is the language of the forex market. What do I mean by that? If, for instance, if you travel from different location to another, from a country to another, you will understand that different people come from different regions that communicate in their own different language, and for you to be able to find yourself flowing in that particular environment, there is need for you to learn that language. Take for instance, if you travel from a country, says Nigerian, to a French speaking country, you will not be comfortable in that particular environment as long as your communication will be altered, because you will not be able to flow with them. They may not understand what you're saying, neither will you understand what they are saying. So for you to be able to flow, even if you have money to spend, it will still be difficult, because you will need someone to interpret this, to interpret that, before you understand what they are saying. So in the same way, when you come to the forex market, there is need for you to understand what the market is saying. And how do you understand what the market is saying? You have to listen to the language the market is speaking. And what is this language? This language is known as the candlestick. Okay, the candlestick is the language of the market. It is the candlestick that tells trader what to do and what not to do in the market. Okay, so I hope that is taken. That is that about candlestick. It's an important concept. As a trader, you don't just want to come in here and open your execution platform and start placing order without knowing what is happening. You have to sit down, read what the market is saying, understand what the market is saying, interpret it, and then tend to follow the information the market has provided for you. All right, so that's that about what candlestick stands for. So now we are going to look at rejection. Rejection candles are very important. The concept of wick rejection is very important. Like in derive, there is no way you you can neglect rejection candles. You cannot overemphasize the impact of weak rejection in synthetic index. So for as long as you want to remain trading this, you have to pay close attention to this weak rejection. And weak rejection are always formed at every turning point in the market. Okay, they're always formed at any turning point in the market. So what are the importance of this weak rejection? Number one is that it helps you to spot reversals. Okay, remember I said they are formed at every turning point in the market. I've tried to mark out some areas where you can see them. All right, if you look at this place, this is an area where rejection is happening continuously. Okay, if you look at this particular environment, there are wicks here, and you see this wick happening as well. So what you observe from here, you will notice that for every point here, after those wicks are formed, there is a follow through to the opposite direction. Okay, do you see? After those wicks are formed, there is a follow through to the opposite direction. So they are very, very important. You use them to I told you the first example, the first important of this weak rejection is that it helps you to spot reversal. If a market is buying and it gets to a particular point, you begin to see weak rejection. What you should do as a trader, if you are buying that market and you are experiencing weak rejection, you should be thinking of taking your profit. All right, because there is tendency, although weak rejection is not a full confirmation that market want to reverse, all right, but it's an indication that there are possibility that the market might tend to reverse from that particular region where you are seeing that weak rejection. Okay, if you look at this place, this is what you're saying. There is a push to the upside, but before the market start reversing, you experience this weak. You see this weak forming into the market, and what happened next? It crashed all the way down. There is a push to the upside, it gets to that particular zone again. What happened? You see, this is a candle that is known as we cannot call this an inverted hammer or shooting star. It's more like a doji. This is a very powerful rejection. So when you see this type of those weak forming in the market, what comes to your mind is that there is a presence of the opposite. There's a presence of the opposite pair. Okay, whether if you are experiencing a weak rejection to the downside, it's telling you that sellers are present in this market. Okay, it says that they are present of seller or buyer. So these are the information, some of the information that weak rejection pass to us. You see the same thing after it comes to this place the third time. What happened? You see that rejection again, and then it crashed all the way down. All right, so it's very, very important that we pay close attention to weak rejection in the market. Okay, the next thing we'll be looking, all right, I need to show you. Okay, look at this zone as well. There is also a week. Before you see the market reversing from any turning point, you will definitely see that week, no matter how small. You look at this place as well. This is also an area where the market wicked, and then what happened? It's buy to a particular point, came down again, wick it a little bit, and what happened? It's moved all the way up. Okay, so same thing is applicable to this place. If you observe this, there are wick forming before every reversal. Okay, so you should pay close attention to wick rejection. So there is another point here I marked. You look at what is happening here. So if you look at this place, look at all this week. After each week formed, after all the weeks that you experience, the next thing is that you see the market following through after the weeks are formed. Okay, so you should pay close attention to wick rejection. The next important of wick rejection is that it is used as an entry criteria. All right, it is used as an entry criteria. Me personally, one of my entry criteria I look out for, very very important in trading synthetic index, is what? Wick rejection. I scale down to my I scale down to my lower time frame, where my entry time frame, and then I apply other concepts and look out for those wick rejection to make my entries. All right, it is very very important. Meanwhile, wick rejection is not an indication that you should not just see wick rejection. Like I'm sure you must have heard, and if not heard, you need to know that candlestick are not to be traded in isolation. There are other things you need to put together before placing your order. Okay, so you don't just see wick rejection and then you begin to place order, but they serve as how should I put it? Okay, they serve as confluence. They add to our confluence. They add to our reasons why we are taking a buy or a sell in the market. Okay, like I said, they act as entry criteria on the lower time frame, and they help us to manage our risk. They help us to manage our risk. What do I mean by that? If you are in a buying market, and just like this place, let's assume you make an entry from this level, you make an entry from this particular zone, and then the market rally all the way up to this place, and you began to observe wick rejection. Or you hold your position, you see the market crashing down, and then it came to that particular zone again, you experience that same wick rejection. What you should do is, you don't have to be sentimental about the market. Once you start experiencing this type of wick rejection, you should take your profit. Okay, there will be need for re-entry if it eventually break the zone, but to be on a safer side, you should take your profit. If you have something like this, if you see the market breaking through like this and then coming back for retest, you see it coming back for retest, you can make an entry from here and then take it all the way up. Okay, but once you made an entry into a market and you began to observe wick rejection in the opposite direction to your entry, what you should do is what? Take your profit. All right, having said that, and I also told you that what, at every turning point there is always a wick rejection. Wick rejection, it's something that tells us about what is happening per time. It's you have to pay close attention to it. When you understand this concept, whenever you look at the market, you should be able to tell what is likely to happen next. Whenever you see them forming at a particular POI, what I mean by POI is point of entry, and they are nothing but what? Your support, your resistance, your channel, your trend line. Those are POIs. Those are levels or areas of value where you want to make an entry into the market. So whenever you see those things forming on that particular spot, you will begin to understand that something is about to happen around this region. And as a trader, you have to bring in all your skill in analysis, in entry and risk management, then you can make your order. So the next thing we'll be looking at is what? Power candles. Okay, the next thing we'll be looking at is power candles. What are power candles? Okay, what I need to tell you about power candle and wick rejection is that I told you that wick rejection has to do with what? Presence of either buyer or seller in the market. All right, those are part of the information that wick rejection give to us. But when it comes to power candle does not just tell you that there is a presence of buyer or a seller. It's telling you that they are in control, that they are actively present in the market, and their effect can be felt. Okay, what is happening in the market is actually the battle between the supplier and the demand, like the battle between buyers and seller. All right, that is what is happening. In fact, it is you and I as a trader that produces weak in the market. Okay, because there's a result of our battle, either the buyer or the seller. Because while the buyers are trying to push the market to the upside, the seller are trying to push it to the opposite direction. All right, so this is how a wick is formed in the market. And I said power candle does not just tell you that there is a presence of a buyer or a seller. It actually indicate that the buyer or the seller are actively present and they are in control at a particular period of time. Okay, so I will just show you some of the power. Okay, some of your power candles. We have the likes of Marabozo, we have the likes of Harami candles, we have the likes of okay, so those are just the few I can remember for now, but those are your power candles: Marabozo, Harami. I will just show you some of them. Whenever you see them in the market, it tells you that there is a huge momentum from that particular, either the buyer or the seller. All right, so these are candles you should pay attention to. These are candles you should pay attention to. Okay. All right, just to just to explain what a power candle is, look at this strong bullish candle. This is a daily time frame. All right, so it actually means that it took each of the candles you are seeing on this time frame, it took each of these candle 24 hours. Every 24 hours a candle is formed. But look at what happened. Look at this. Between, I will just have to mark it so that you will understand what I'm saying. Okay, look at just one candle. Look at just one candle. Look at how many candle it covers. This can look at 1 2 3 4 5 6 7 8, like just 8 candle, which means a candle that's formed in one day is able to cover the candle that's formed in 8 days. So this is an example of what a power candle. This is the one I refer to as Marabozo. Okay, and after that, what did you see? You see a follow through, and the market went all the way up. This is about how many pips in the market. So you should pay attention to power candles. They are very, very important. Whenever you see them forming in the market, you know that there is a presence of either the buyer or the seller. Okay, they are very, very important. Look at this region again. Look at this region again. Can you see? Look at this region again. This is how many candle? 1 2 3 4 5. Is it up to 5? 1 2 3 4 5. Okay, 5 candles. 5 candles covering multiple candles. You can't even, they are, look at how many they are. So these are example of power candles. All right, so whenever you see them in the market, you should know that there is a huge pressure. Okay, there is a huge pressure in the market. So this is how you pay attention to some candles. Whenever you see them, you should be careful, or you add them to what you are looking at in the market, so that you'll be able to make good trading decision. Okay, having said that, the next thing we'll be looking at is candlestick pattern. Okay, what are candlestick pattern? Candlestick pattern are formed when you combine two or more candles together. All right, and you can have a bullish candlestick pattern, bearish candlestick pattern, and an indecision candlestick pattern. Okay, so you can have them in this three form. They can be in this three form. When you look at bullish candlestick pattern is the type that will tell you that the market is about to take a buy, and for bearish is the one that will tell you that the market is about to take a sell. So what do I mean by the likes of? I will give you an example. Look at this place. This is an example of inside bar. Okay, this is an example of inside bar. I will show you another one like the bullish. We have the bullish engulfing candle and the bearish engulfing candle. I am sure you know what they represent in the market, and when you look at them, you will be able to tell your decision to take will not be a problem because you already understood what those things are. Okay, so this is an example of a bullish engulfing candle. Why is it called so? You see the first candle here, the first candle is red, the second one is what? Green, and the green candle is just the one that engulf the red candle. This is telling you that what the buyer have overpowered the seller. This is why this thing is able to carry this is able to cover this bearish candle. And what did you see after that? You see the market rallying up. So those are way. You have another one. There is one that they call evening star. Evening star is a three candle candlestick pattern. Okay, we have the first one for evening star. Is telling you that the market want to fall. You want to see them from a point of resistance. Evening, you want to spot them from a point of resistance, and morning star, you want to spot morning star from the point of support. I will just check through the chart if I can see one. I don't want this video to be too long. I will look at one. I'll look at one at every turning point. Okay, this is an example. This is another example of an inside bar. I can actually call this an evening star, but I'll use this to explain to you so that you can have idea of what I am saying or how it looks like, and whenever you look at it, you'll be able to identify them. So what an evening star looks like, I told you there are three candlestick, but there are three candles. All right, the first one could be a bullish candle. The second one will be a doji, which is an indecision candle, and the third one will be a bearish candle. Okay, a bearish candle. So once you spot them, you should know that reversal is might likely to take place. Okay, so those are knowledge we add to our trading career that help us to make good trading decisions. You should be able to understand the language of the market as candlestick. You should be able to understand what wick rejection is doing, especially if you are a derivative trader, you're a synthetic trader. You should be able to look at it very, very well and pay close attention to them at your turning point. And I've told you that your turning point, or your POI, or your areas of value, are your support and your resistance. They are your trend lines, your channel. Every point you are willing to make an entry in the market is your turning point. I've given you that wick rejection help us to manage our risk, telling us when we should take our TP, because there are possible reversal that might be looming up, and it also help us to spot entry where to make. It also help us to spot entry into the market, and it's an indication that there is a there is an opposing pressure in the market. Okay, so that is that about candlestick anatomy. If you find this video helpful, please, if you're new to this channel, try as much as you can to hit the subscription button, so that whenever we have good, which of course will be giving the best of our knowledge that can help each and every one of us to grow as we journey into gaining financial freedom, so that you can get notified whenever we post any important content. All right, thank you so much for watching this video. God bless you.